One of the other areas that we practice in and a service that we provide to our client is what we call insurance advisory services. Our clients typically will use an insurance broker to help them either purchase insurance for the first time or renew an existing insurance program. It could be directors and officers, it could be general liability, it could be their property, business interruption insurance. So what we do is we come in and provide an independent and legal assessment of the policies, sort of backstopping, if you will, working with their insurance brokers to make sure that our clients are not only getting the best insurance possible at the best prices, but getting the best terms and conditions in those insurance policies. These policies change from year to year, from underwriter to underwriter, and it makes an enormous difference. One single term in a policy, one single provision, one single exclusion can mean the difference between whether your $100 million loss is covered or not covered. So what we like to do is bring the experience on the claims side and litigating these claims against insurance carriers and bring it over to the advisory services side and really bring value to our clients so they get enhancements basically to those insurance policies and making sure that their insurance brokers are really delivering the best possible insurance policies and programs available in the market. One example of what we do in the insurance advisory services area, just recently for a client of ours, they have what we call a sort of multi-layer insurance program, which is made up of a primary insurance policy, and above that will be a series of excess policies, sort of your tower of coverage. So for this particular client, we're talking about a total of $50 million of coverage, primary at $5 million, and then another 45 of what we call additional or excess insurance. Here's the issue. The excess policies all had language that said we are only going to be triggered if the underlying or primary insurer pays their policy limits in full and the insurance company pays it, period. Here's the problem. Our client had a claim. They want to settle with the underlying insurer, the primary. It's a $5 million policy. They had a dispute about coverage. Our client was willing to pay $1 million towards the policy limit. The primary was going to pay $4 for a total of $5 to exhaust the program, to exhaust that policy. The excess policies all had this language that said, sorry, we're not triggered because the underlying insurer didn't pay all $5 million itself. You, policyholder, made a contribution of $1 million. This is a very, very bad situation. We see it all too often. So recently we saw the same language on a series of renewal policies. We, working with the broker and our client, were able to negotiate that language out of the excess policies so that now in a future dispute, if our client wants to make a contribution to the primary insurer or maybe another underlying excess insurer, the other carriers above them, the other excess insurers, are going to then be triggered. And so their insurance proceeds are going to be available to our client. It's a very, very important aspect of a multi-layer insurance program, but all too often it causes a problem later on with an actual live dispute. This is just an example of where our insurance advisory services identify a problem early on, fix it, modify it, so we don't have a problem later on when we have a live dispute. We have insurance policies that are enhanced, are more responsive, and really more applicable to our clients and the claims that they're involved in.